Hello, and welcome to our presentation, A Guide to Your Pension Statement. What we will be covering in today's presentation is how to find your pension statement. What is it? What does it show? Splitting between your final salary benefits and the care scheme benefits, your projected benefits, death benefits, and pension tax limits information. What is your pension statement? Well, your pension statement is issued annually and shows a calculation of your pension benefits up to the 31st of March of the current year. The calculation is based on information given to us by your employer. It is a statutory requirement to provide you with a pension statement, and under the appropriate scheme regulations, we have to do this by the 31st of August. That is 6 months, within 6 months of the end of the scheme year. Your pension benefit may also be known by you, your employer or us as your annual pension statement, your annual benefit statement, your ABS or your benefit statement. But they are all in fact the same document. How do you find your pension statement? Well, for the vast majority of people, you find your pension statement on pension account. My Pension is our electronic means of providing you with information about your pension statement, your pension details, and it is the primary source of our communications with yourself. So if you have already signed up for My Pension, you need to go to My Pension. If you haven't signed up already, again, if you go to My Pension, you can find details of how to log on and get an account. For those who have logged on, you go to View My Documents, then go to the My Documents section, and this will bring up all the pension statements that we have issued to you in the past. One of the advantages of having the information electronically is that you can't lose it. It will be there for you to see. So what does it show? Well, it shows the scheme details, your personal details, details of your pension benefits built up to the current scheme year, projected benefits to different ages, death benefits, and pensions tax limits information. One of the first things you'll see when you open your statement up is a logo. This will be from one of 4 logos, either Lincolnshire Pension Fund, West Yorkshire Pension Fund, the London Borough of Hounslow, or the London Borough of Barnet. Although we are the West Yorkshire Pension Fund, we do administer all 4 schemes under shared service agreements. So the logo up here will show you which of the 4 pension schemes you are actually a member of. Basic details, name and address, your member number. This is your unique identifier for this post, for this pension record. If you have more than one job, you will have more than one pension record with us. Each job is recorded individually because that's what the scheme regulations require us to do. And your member number is the identifier for this particular post. So also have the date to which the statement has been produced and the date on which the statement was actually produced. So I said we have to produce them up to the end of the state scheme year, which is the 31st of the 3rd 2022, but this particular statement was produced on the 31st of May. Moving on to through the statement, the next section shows your personal details, where we'll have your full name, your date of birth, your employer, pay reference, The section of your scheme that you're in, we have two sections to the scheme. There's the main scheme and the 50/50 scheme. So this is where we'll tell you which part of the scheme we think you're in. Date joined scheme in this particular post. So each post is identified separately on our records. So that will be the date you joined the scheme in this post. You may have joined it an earlier or later date in other posts, but they will be shown on the appropriate statement. Your job title, as supplied by your employer, and details of the hours that you're working. This particular person is working full-time. If you were working part-time, it would show part-time and the hours that you work. One thing to bear in mind with the hours that you've worked is that if you work term time only, sometimes the hours are recorded as being the number of hours that you actually work for the weeks that you work, and sometimes the hours are prorated over 52 weeks of the year, so they may show slightly fewer hours than you actually work. This isn't a problem, it's simply where the information is recorded. It doesn't make a difference to the benefits when they are calculated. Similarly, we show your employer, in this case an hypothetical North Council. This is the name of the employer as they show in our scheme records. So particularly if you're a multi-academy trust, it is highly likely that your employer will be the multi-academy trust rather than the individual school that you work at. Similarly, if you work for a council, it will show the council name rather than the directorate, division, depot, whatever it may be that you actually work in. If any of these details are wrong, please let your employer know, and then they will correct them on the information that they provide to ourselves. So after those first two details, we get into the nitty-gritty now of the value of your benefits. So we show you your final salary benefits. If you had service before 2014, it will show final salary benefits. Service after the 1st of April 2014 is in the new care scheme, so we split the two out. One thing we do though with the final salary benefits is we don't split out the 1/80th accrual rate scheme before 2008 or the 1/60th scheme that was in place between 2008 and 2014. We just combine those two periods of service together and show you one set of final salary benefits and one set of care benefits. But say it will show in this kind of calculation both the 1/80th and the 1/60th added together. But we'll look through this in a little more detail on the next slide. So we've got your value of the benefits as at the 31st of the 3rd 2022, current scheme year, and it shows you the dates of service in this scheme. Start date, in this case 12th of May 2003, scheme finished 31st of the 3rd 2014 when it became the care scheme. So although they have both the 1/80th and the 1/60th service, it is just shown as final salary compounded together. We use the rate of pay as at the 31st of 3rd 2022 in calculating the final salary pension benefits. If you are part-time, this is the full-time equivalent pay. So it may be that your actual take-home pay is less than this £25,000, but that's what you would receive if you worked 37 hours per week or 36 hours per week or whatever your full-time hours are. Final salary membership is the period that counts when we come to calculate your pension benefits. This is prorated if you have worked part-time. So it may be that you worked for 20 years, but you only worked for 18.5 hours out of 37 for those 20 years. So your dates of service would show the full 20 years, but your final salary membership would only be 10 years because you've worked half that period of time, therefore you've paid half the amount in that a full-timer would, therefore you get half the service that a full-timer would. The reason we reduce your service is because we haven't reduced your pay, we've always used the full-time equivalent. So if you are working part-time, you will get the percentage pension benefits that you've paid for. This particular person, 10 years, 324 days service, pay of £25,166, gives a final salary yearly pension of £4,054.21 and a one-off lump sum of £4,612.70. You all will have some care pension because you're all active members of the scheme. Some of you may not have final salary pension, so some of you may only get to see this box because this is the care scheme that's run from 2014. In this case, we work out your benefits on the total pensionable pay you've earned from the beginning of the year to the end of the year. So this is your actual pay that you pay pension contributions on, not the full-time equivalent that we would use in the final salary scheme. The calculation shows the value of your pension from the previous year. The increase that we've applied to your pension to take into account the cost of living adjustment. Each year your pension is adjusted to take into account cost of living. Basically takes into account inflation, meaning that when you come to retire, the pension benefits you've built up should have the same purchasing power on retirement as the day that you earned them. So we have your opening balance, your cost of living adjustment, and the pension you've built up during the year. This pension you built up during the year is based on 1/49th of this year's pay. So the £568.69 is 1/49th of this year's pay. We add the three figures together, your opening balance, your cost of living adjustment, and the pension you built up during the year, and that gives you the closing balance at the end of the year of £4,273.66. We then add those two figures together for you, your total final salary benefits, your total care benefits. So as at the 31st of 2022, the pension this member has built up is £8,327.87, with a one-off lump sum of £4,612.70. However, the pension you have built up to date is what you would get if you had finished work on the 31st of the 3rd 2022 and not claimed it until your normal pension age. It's not what you would get if you finished work today, because if you finish work today and you're before your normal pension age, your pension will be reduced for early payment, which can make a significant difference. So what we do is, on the next page, we give you some details of your pensions estimates going forward into the future of what you would actually receive. Now, obviously, because we're doing this in the future, we're making some assumptions. So what we've done is we've adjusted the amount to take into the benefit you paying them early or late. We've assumed your pay will carry on at the £27,000 each year. As your pay changes, the figures here will change. All the pension amounts are yearly amounts. All the lump sum amounts are one-off payments. You can, if you wish, give up part of your pension for a bigger lump sum. Each pound of pension you give up gives you £12 of extra lump sum. The figures we provide here are quite accurate, provided the information your employer has provided us with is accurate. However, before you finally choose to retire, you should always ask your employer for a pensions estimate. In the future. So we show you your benefit value at current date, but that's slightly misleading because if you do leave now, the reductions haven't been applied to that already. So we show you your benefits at 55. That's the earliest current retirement age that you can take your pension benefits. 60 and 65, of course. Those are the old pension dates, so those are the ones that people kind of have in mind. And we then show you your current state pension date to give you some idea of how the benefits are going to build up in the future. So between those four figures, hopefully you'll be able to get a good idea of what your benefits will be at a particular period of time. We then have a few notes that show you how we go about actually increasing your pension. Your care average without earnings pensions account. What you would get if you died before you left employment. One of the benefits of our scheme is a one-off death grant should you pass away whilst a member of the scheme. This is generally 3 times your annual pensionable pay. So in this case, it's a one-off death grant of £83,597.88. We also pay partners' pensions. So if you were to die before you leave your job, your husband, wife, civil partner or eligible cohabiting partner will get a partner's pension shown above each year for the rest of their life. Eligible children may receive a pension. More details of that can be seen on our website. We tend to default to using the marital status of married, so don't worry too much if we are showing it incorrectly. Should it ever become relevant, we would check that at the time rather than simply relying on our records, as people's personal circumstances do change. We do show details of who you have nominated to receive your death benefits. So your spouse, civil partner, cohabiting partner receive the benefits as per the scheme regulations, where you can nominate who you wish to receive your death grant, and they will be listed here. Rather unimaginatively, we've got just nominated person here, but that will be the person's name and the percentage of benefit that you have allocated to that particular person. Please do check this nomination. Make sure it's still applicable. Check to see if your personal circumstances have changed. If you wish to change your benefits, you can visit our website for a form, phone up our contact centre, we'll post you one out, or if you register for My Pension, which you will have done if you're seeing this, you can change your death grant nomination online. We're also showing you your pension tax relief limits. For the vast majority of people, these are really only for information, as you're not going to be affected by them. But the government has in place a lifetime allowance. That's the maximum amount of pension savings you can build up over your lifetime that can benefit from tax relief. The current allowance is £1,073,100. As part of your pension statement, we work out the percentage of that you have used in this particular employment. A particular member has used £173,992.50 worth, which is 16.21% of their lifetime allowance. There's also a maximum to which your pension benefits can grow each year. The figure is below is the standard annual allowance threshold of £40,000, but a lower allowance may apply to yourself if your income exceeds £110,000. So for this particular person, their estimated pension savings for this year is £13,147.17. That's not the amount of money that was paid in to the pension scheme. That's the amount the benefits have grown during the year. So it's not as simple as adding up how much you've paid in and how much your employer's paid in. So each job you have with us has a separate pension record, so we will work out the lifetime allowance and the annual allowance on this particular record. If you do have more than one job or you have pensions elsewhere, you need to add up all the pension savings together just to ensure that you haven't exceeded the lifetime or annual allowance. If we believe that you have exceeded the lifetime or annual allowance or getting close to that, in a single employment with us, we will write to you and tell you about that so you can consider your options. But do bear in mind, if you have multiple employments or old pension rights, we don't necessarily know about them, so we can only give you the information that refers to our scheme. We then have some details again of how we've calculated your final salary benefits. We explain how that works, how the membership accrues, how the final pay is calculated, and how we've worked it out between the 180th and the 160th scheme with regards to the service. And we just remind you towards the end of the page that your pension benefits are built up on 1/49th of that year's pay, or 1/98th if you're in the 50/50 section. Again, bear in mind the contributions you pay don't actually have any bearing on the amount of pension you will get. Because we're a defined benefit scheme, the benefits you get back are based on the scheme rules. Final salary was a 180th or 160th accrual rate. Care scheme is a 1/49th accrual rate or a 1/98th. You don't have to worry about investment return in our scheme because the benefits are defined by the scheme regulations. Some information of how to contact us. Do please check your statement carefully. Because we need you to register for My Pension if you haven't already done so. Review your pension statement. Do contact your employer if there's any errors with regard to your personal details, or ourselves if you have issues with the service that we are showing. Check your expression of wish form and review and update it as necessary. Quick disclaimer, hope that's been useful. If you do have any questions, do feel free to visit our website where we have further information, or contact us via our contact centre, by telephone or email. Thank you very much.